I'm really excited for this video today. We'll be going through city by city, what's going on in the Australian property market, city by city. We'll be talking about days on market, demand side, stock on market. We'll be talking about vendor discounting. We'll be talking about price trends. We'll be talking about the rental market, city by city. So we'll go around the ground, so to speak, and if you want to refresh yourself about what's happening in the Australian property market using data, if you already have an investment, you want to know what's in store for your investment in that location, then stick around for the next 10 minutes. My name's PK and I help people build passive income using data without needing a $15,000 buyer's agent every single time, and this channel exists to help you guys get ahead, obviously through Australian real estate. So if you vibe with it, give it a subscribe, turn notification bell on. Most importantly, give it a thumbs up, give it a like. I'd super appreciate that right now or at the end. It's up to you. But let's get into it. So you can already see Sydney housing cycle. So just the way to read this chart is it's November each year. So it goes all the way to November 2021. You can see that this Sydney property market did rise. The annual change was positive through 2019 and to some extent 20, and then obviously in 2021 we've seen this massive boom. You can read these numbers yourself, but my commentary, my sort of thought process on this is that it's still increasing, but you can see that the rate of growth is just starting to mellow out. And so what this tells me is that I've done videos before about how Sydney's close to a bubble. House prices aren't going backwards just yet, but definitely that rate of growth is shallowing out. So, if it was a decision of buying, holding, or selling in Sydney, I would say don't sell just yet. I would say if you really want to buy in Sydney, which I don't recommend, at least hold what you already have. Okay, at least hold what you already have. Let's go now to the next city, Melbourne. You can see that the rate of growth, these numbers compared to Sydney aren't as extravagant. Sydney was well above 25% over the last year. Melbourne's only 16%. And that the same sort of story, actually prices are starting to mellow out in the last 1 or 2 months. That price growth is starting to mellow out. Right? It's still increasing, there's no doubt about that, but COVID and all the lockdowns and restrictions, people leaving Melbourne for Queensland, other places regionally, has had its toll on the property market. It's mostly the higher end, which is going bananas. The western side, down to Werribee, all those sorts of areas hasn't really been going nuts as much as, Mornington Peninsula, East, other places around Melbourne. So for my money, whether it's a buy, hold, or sell, I think in Melbourne it's probably a hold as well. I don't think prices are going to go through the roof or continue to go through the roof. And once again, I think better places to put your money. Brizzy, check this out. It's grown just as fast as Sydney. So Sydney was 25.8 in last year, Brisbane's 25.1. And the thing about Brisbane is you see this annual growth line, this one right here. It's like a hockey stick right now. It's like a rocket going to Mars. There's no sort of curtailing it. There's no pig's tail, as I like to call it, as there was for Melbourne and Sydney. It's going right to the moon, right? And no, whether that's affordable, the answer is yes. The house prices in Brisbane are still very much affordable for the average incomes, which can't be said for Sydney, Melbourne. Okay, so I think that will continue to rise. You can see that in the last quarter, prices rose 7.4%, and they're actually, in November, they've grown even faster than that rate, okay? Because 2.9 is a huge number. Times 3 to look at a quarter is faster than 7.4. So that rate of momentum is still picking up. It's actually accelerating. Okay, so the car is moving forward, prices are moving forward in Brisbane, but the driver's actually throttling the accelerator, and the acceleration, that pace, that velocity is picking up even more so than what it was 3 months ago, believe it or not. So Brisbane, buy, hold, or sell, I would say definitely it's a buy in my mind, at least. The yields are starting to suffer in Brisbane a little bit now. I'll come back to that. Adelaide is a similar story to Brizzy, hasn't grown as much as Brisbane and Sydney, but well on its way. And you can see the last 3 months of growth 6.5%, the last month of growth 2.5. So 2.5 times 3 to compare it to the last 3 months is obviously 7.5. So once again, in November, prices, that throttle is being pressed. Price growth is actually accelerating even more than its historical in the recent history movement. So Adelaide buy, hold, sell, it's a definite buy. And we probably bought 200 houses in Adelaide last year and early this year as well. Perth, very interesting one. Perth, very, very interesting one. What you're finding in Perth is that a lot of people who are burnt by the market over the last 5 years are selling. And even though demand is increasing, supply story is really, really high. And so that's why you're seeing that even though prices have grown, as you can see here, in the last 12 months by 15%, they're still growing in the last quarter. They're still grown in November, but they're just that rate of growth is shallowing out. And really, the story of Perth, is one of markets within markets. There are suburbs that have grown $100,000 from a base of 300K from the start of this year, and will continue to do so. And there are suburbs that are up at 500-600K that are still pretty flat. But what's happening in the undercurrent of Perth, vacancy rates are very low. You talk to a person on the ground there, the economy is positively buzzing. And I think Perth is almost like a proxy for what will happen to the broader national property market in 2022, 2023, where it's not a case of let's put a blindfold on, buy anywhere and the thing goes up. You'll really need to understand the data to be able to identify those markets within markets that will do really well. To round it off, or close to round it off, Hobart, that pig's tail is starting to emerge here a little bit. So it's almost like Hobart back here, middle of this year, was probably where Brisbane or Adelaide are now. There's so much scope left, but now, Hobart is positively unaffordable for the locals. This is all driven, the last part of it at least, by investors from Melbourne, Sydney, especially this year. Nothing wrong with Hobart. We invested a lot back in 2015, 16, 17, but most recently it's been investor driven, and it's a little bit of a bubblish territory, I would say, over there. Prices aren't going to go backwards. I wouldn't say sell. I would just say, maybe think 4 times before buying, but hold those amazing properties that a lot of you guys have already bought in Hobart. Darwin, I won't spend too much time on it. We've never invested in Darwin, probably never will. Who knows? But, the property price is actually reducing. Not a whole lot of diversity in Darwin. And Canberra, for the first time, it's been a golden child. It actually preempted this national housing boom. Canberra was almost the first one to boom, apart from maybe Hobart as well, going back in the last 5 years. But once again, that price movement or that acceleration of growth is now dampening. That doesn't mean prices aren't growing. You can see in just the last 3 months, they grew by 5%, which on a normal year you'd take for a whole 12-month period. But the rate of growth is still is slowing down. It's still growing, but slowing down, which is almost like the narrative or the theme of the day. So Canberra, if you're flush with cash, if you have loads of money, you can afford huge negative gearing, go ahead and buy. But for mine, it's more of a hold territory at the moment. All right, so guys, I have 4 or 5 more charts to take you through. Hit subscribe if you're getting value. The next one I'll take you through is median days on market. Now, of course, this is average only, but what this is saying to us, and this is all core logic data, by the way, that properties are now taking slightly longer to sell than what they were before. Across the combined capital cities, median days on market, how long it takes for a property to sell, have increased from 21 in the 3 months to May to 25 days in the 3 months to November. So, 4-day difference isn't really that material when you think about on a normal year, the days on market would be much, much higher, more at sort of that 50, 60 mark. And you can see the trend here for combined regionals, this light purple line, days on market slightly ticking up, but don't let that fool you into think that demand is dropping. It's not. It's very slightly ticking up. and capital cities are even less. So it's not taking long at all for properties to sell. Okay, that's just a fact. The property market is cooling down, like I've said to you, in terms of its rate of growth, but it's definitely not cooling down in terms of prices. And the next one that I'll take you through is vendor discounting. So how much do vendors need to discount to sell their price? Now, you don't need a chart to tell you that they don't need to discount much at all across most places. You can have a look at this table yourself. But once again, the key thing that I want to illustrate is whether it's combined capital cities or regional areas, they've tracked pretty similar, in the last 5 years. And right now, there is no discounting. In fact, it's negative, which means that, vendors are getting a premium. They're getting more than what they advertise for, which is, it's still a seller's market. It's still a booming property market. 2022 is not going to see prices come down. The rate of growth will shallow out, but still plenty opportunity out there. Great time to be buying. The thing I want to take you through, however, is that total listings have remained, pretty low. So I'll just take you through this one before this. So new listings have jumped about 22 or 23% since October. So more houses for sale effectively, right? And you can see this 2021 dark purple line, from September up, if we track it through my mouse up to November, they have gone up. So in spring, summer, more houses come for sale. So it has increased as restrictions and lockdowns have reduced. What that would normally tell us is that the housing market is probably due to cool down a little bit, right? And that's probably what the media is telling you as well. However, when you look at data, the total listings have remained 24% below the 5-year average due to strong absorption from sales. In layman's language, that just means that, yes, there's more stock for sale, but demand is so strong that it's absorbing that higher supply. And this is the kind of data that, I use, my students use right down to the suburb level to really understand where it's going to boom, where are those suburbs that are slightly cooler, where should we invest our money for short-term, long-term results. This is the sort of thing that the mainstream media, doesn't tell you, and that's why people start to get afraid of, clickbait headlines like, stock levels increasing, mass sell, all that kind of thing. And the last thing I want to take you through is rental rates. So what you can see is that the housing market, it's not only increasing in terms of price, but the rental market is increasing as well. You can see here that Australian rents increased by almost 10% in the 12 months to November, which is the strongest for more than a decade. You can see here that rents, the annual change in rents, increased by 10%. Right, so it's phenomenal, and you can see it's across basically all places. I think this, medians and averages do hide the reality. For example, I have a house example, for example, in Newcastle, which would fall regional New South Wales, and the rent has gone up this year, literally just in the last couple of months, from $550 to $690. All right, so $550 to $690. So there's there's this data which is very important, but individual locations, individual pockets of suburbs, intra-suburb locations, they will do better, they will do worse. That's really the art and science, or mostly science, of property investing. The last thing I want to take you through, or second to last thing maybe, rental yields, okay? So because house prices have gone up so much, and despite rents going up as well, yields have still come down. Remember, yield is just your rent, weekly rent, times 52, because there's 52 weeks in the year, as a proportion of the total purchase price or the total value of the property. So yes, the rents have increased, but house prices have increased even more. Therefore, yields have come down. And once again, these are averages, but I can tell you, we're not investing regional Northern Territory, nor are we investing recently in regional Tassie. But in places like regional SA, we're getting a rental yield of around 6 or 7%. Regional Queensland, we're getting rental yield almost up to 7.5% in the locations that we're investing in. By the way, it's not like, towns with a population of less than 10 or 20,000. That's not where we're investing. But I'm just trying to highlight that these are just averages and you can do much better. Same with regional Vic. I mean, you can still get 6% yield in regional Vic if you know where to look. Same with regional New South Wales. I think these are very low numbers because, there are some areas that heavily skew it. For example, regional New South Wales, Newcastle, Geelong, skew this data very low. But if you go all the way out to Dubbo and other places, it's well higher than this. All right, but have a look at this, pause this video, go back and really absorb this data. And the last thing I want to take you through is dwelling approvals. So dwelling approvals are a really good proxy for what's happening on the supply side in the future. Right now, everything might be rosy, house prices going up, but the thing that cools down house prices the most in history, in my experience, according to data, according to everyone, is when there's too much stuff built. Right? And you can see this light purple line, which is houses. Because of home builder schemes and everything like that in 2020, it spiked up and then it came down as all those grants finished. So you might say, well, if that spiked and supply is really high, then why did prices grow? Shouldn't have prices, mellowed out? The reason is that because most of the spike was in outskirts of cities. So Western Melbourne, Ipswich, Logan, and up past Narangba in and around Brisbane. You get the idea. Out really out west in Sydney, and some of these areas, not all of them, haven't really experienced that great of growth, like Ipswich, compared to other suburbs where the supply story, the stock on market was very tight. But regardless, that sort of supply hike, as you can see here, was limited to those areas. It wasn't in many other areas because it was all new stuff, new houses being built on paddocks and farmland and greenfield areas. So now that's come down, and I think this will create another wave of price pressure on the national Australian market because now it's back down to basically its decade average. And units are well below its decade average, and that's why you're seeing unit prices grow. And I've done another video on that, delving deep into where you should buy units, if at all. I'm not really a fan, but there's still a good opportunity for some arbitrage right now. Guys, that was a long video full of data. I hope it didn't cause you a headache. But this is the kind of data that you really need to understand if you're going to make an informed decision about investing your hard-earned money in the Australian property market. We go through this into more micro. We have a system, we have a formula, or it's formulaic, I should say, thresholds, weightings, etc., suburb by suburb to decide where we should be investing. But regardless of that, you need to understand this as well. Don't just throw away your money to a property investment firm that has a great brochure and bigs up an area. You need to assess it for yourself, looking at the data, not just high-level sales marketing pitches like new hospital or new shopping center or train station, all this kind of garbage that they sometimes come out with. But guys, hopefully that brought you a whole bunch of value. If it did, hit the subscribe button. If you're still watching, thank you so much. I'll leave some links below to the podcast where you can up your level of knowledge, to the Facebook group, more than 10,000 people where you can up your level of knowledge, and also to my website where you can get a whole bunch of free training as well. My name's PK, and just remember, you can do it.